All right, here we are. Apologies for the delay, everybody. There's just some slight technical issues. I'm not going to say who it was. Let's just say it was somebody's. Thank you, everyone, for joining us today. I'm here with two very, very fascinating individuals, and I'm going to explain who they are right now. We got Tom Luongo. Check on the bottom here. Tom Luongo. Check out tomluongo.me to access his blog posts, access all of his podcasts and everything. And StormyWaters at Norman Dodd _new. These two guys are guys to check. You can check them out on many social media platforms. Also, you may notice that Peruvian Bull is not here. Unfortunately, he had to pull out last second. He's on a fucking plane to parts unknown. We're going to get him back at some point in the future for another panel because there's no shortage of financial topics that we would like him to weigh in on. But I tell you what, I'm good with who I got today. We're going to have a rip-roaring good time, and it's a very, very exciting topic. So, Tom and Stormy, thank you so much for taking the time today.
Thanks. Appreciate the invite. Should be fun.
Happy to be here as always, Dimes.
All right. So I guess we'll just jump right into it. And we discussed this topic, the City of London and also the Bank of England, and very broadly what I'm terming the financial war going on between the Bank of England and America. And I think what we need to do is just set it up, what it is we're talking about. And I was wondering, maybe I throw it to Tom or Stormy. Feel free to jump in however you want. It ain't a debate. We're just a bunch of guys talking. Can you give us a rundown on the City of London? What is there to know about this sort of corporate financial entity? How is it different than England proper? And what can we say about the City of London?
Well, I can jump into kind of how it started, what it was supposed to be, and how it's kind of taken over the governing processes, so to speak, in the UK. So it's a relic of the Bank of England is really kind of irrelevant up until the creation of the offshore dollar market. I mean, outside of its role in World War I, but I mean, that was more of a policy thing. It was originally supposed to be a privilege given to the Bank of England, right? And ended up through, what I mean by a privilege, I mean the ability to lend in dollars, right? So a bombed out shithole is about as good of a place as you can ask for if you are a communist revolutionary. So after World War II, Europe was now, butting right up against the communist Soviet Union and was in fact a bombed out shithole. This is a problem. So rather than give a bunch of gold or just send money over there in pallets like we did in Afghanistan or whatever, which credit where credit is due, if it wasn't maliciously used afterwards, it was a brilliant move. As I'm sure Tom would agree, we're the only nation in history that went to war on a scale that no other human civilization in all of history has ever gone to war. And we are the only country that has gone to war at any scale that didn't get inflation and economic destruction afterwards. We in fact got a period of economic prosperity. So it was clever, but it got hijacked. This privilege, the ability to lend in dollars, was supposed to go to the Bank of England, like I said, but through some rather shady shit, it somehow ended up a privilege of Midlands Trust Bank. We can go into who owns Midland Trust Bank, but what's more interesting is with this privilege, which Tom could explain why the privilege would allow Midlands Trust Bank to do what they did. By the end of the 60s, Midlands Trust Bank had stitched up in some way or form, whether it be through bonds or whether it be through options on equities or whatever, but they've, through various means and various shell companies, they pretty much stitched up every bank in England. And by the end of the 70s, most of the banks on the European continent were in some way, shape, or form, whether majority or minority, owned by the same folks that owned Midlands Trust Bank. And it was only in the 70s when this system that was a life raft, a rope that we threw to the Europeans post-World War II, was fashioned into a noose and immediately tried to be thrown around our neck as soon as we weren't paying attention. So libertarians, you don't have a gold standard, not because Richard Nixon is a mean, bad guy. It's that the dollars were redeemable in gold, and we forgot about a money printer that we may have left in Europe on accident. And they printed a bunch of them, and they tried to redeem them all at once, which is why you don't have a gold standard. Anyways, this fucking monstrosity has now ballooned to, what is it now, Tom? Like 8 times the size of the domestic dollar market?
Yeah, the offshore dollar market, it's enormous.
Yep.
We have a question here from Felix Fairmont. I'm sure this is a question you get quite often. Where's the gold, is what he asks.
Tom?
I think I'll be honest with you. I think it's exactly where we say it is. I think it's in Fort Knox and under the Mariners building and in the Bank of England. But the Bank of England doesn't seem to have any gold. But I mean, they sold it all at Brown. They sold what's left that they had at the bottom at Brown's bottom at $2.44 an ounce, right? I firmly believe that all the gold's still here. I
agree with Tom, and I actually think it's more than what we're saying.
Yeah, I think Stormy. I'm glad you say that because Brent Johnson's been getting a lot of shit from a lot of people about saying an exact thing, and I'm like, why wouldn't there be more gold there than we thought there was? Moreover, we're custodying a lot of other people's gold as well, right? And and
where did Saddam Hussein's gold go?
What's that?
Where did Saddam Hussein's gold go? I believe it was the largest gold holdings in that side of the Middle East. And where did Gaddafi's gold go? That other mega large gold.
Where did Ukraine's gold go? When Yanukovych was overthrown, all the gold was airlifted out within like 12 hours.
Really? I did not know that.
Oh yeah. That I mean, I actually made zero hedge. I heard about it, and I heard about it from a couple other places as well. But yeah, whatever gold Ukraine had got airlifted out. And then apparently I heard something recently, and again, salt all this to taste. I don't know how true this is or not, but that all the gold turned out to be tungsten. But which is also
very Russian.
Yeah, it was.
So just to clarify, the rumor is...
the other question is, where's Tom's cigar? It's right here. It was just in the ashtray while I was speaking.
I think Felix probably asked that because the conspiracy or rumor is that we would open up Fort Knox and there would be no gold. And I suppose it would be distributed throughout the world. Where do you think that belief comes from?
The Bank of England.
I would say that it comes from the belief and the mistaken belief that we've been, or I would say mistaken, that we leased out the gold, right, in order to suppress the price of gold over the course of time, because you're trying to undergird a dollar financial system that is growing by leaps and bounds, but trying to keep the validity of the dollar as strong as possible by suppressing the price of gold. It's a very basic incentive-based argument that if the United States wants to print unlimited amounts of money to use to build an empire around the world, well, you have to suppress the price of gold, and you do so through the LBMA, over-the-counter derivatives trading, through the COMEX futures trading, and all the rest of it. And that argument was it's a powerful one, and it probably was even true at least at some point. It's not true anymore, but that's something we'll get into later. So, Stormy, you can fill in.
Probably right around the same time that all of JP Morgan Chase is a very interesting is a very interesting organization to watch.
Yes.
Like Tom I came to my understanding of the political topology of the United States of America from a different way that Tom did, but he and I arrived at the same solution. And then I started paying attention to Alex Crane. I'm like, oh wait, he got to the same conclusion I did and Tom did, but his methodology of arriving there was entirely different. And then I came across Martin Armstrong's, which was, again, same conclusion, but slightly different methodology. I'm like, okay, this from from a scientific perspective, this is very promising,
Yes.
And then, okay, well, let's see if it's predictive. Oh, it turns out to be predictive too. Okay.
It turns out to be pretty damn predictive, to be honest with you.
If you could give a couple of predictive examples. I know, Stormy, I watch you. You're always calling things on X. We'll get to a couple of those later on, but can you think of any off the top of your head that might have helped you predict something?
Okay. So,
Sure.
well, my favorite one is the well, actually, let's just go through some of the recent ones, some of the recent predictions that have been true, that aren't just entirely political. Because one thing that's one thing that's very hard for people to get their head around is economics is politics, and not just like economics, but finance. Finance is politics. So if you watch the capital markets and with a discerning eye, you will get a better understanding of what is actually happening in the halls of power than you will anywhere else. So recently, I've been screaming that the European Union is not long for this world. An opinion that's not a prediction, because I put a bunch of money on it. So that means I have skin in the game in this prediction. But that the Great Reset was actually just a giant cover story for a sovereign debt default.
Yes.
And actually, in fact, I talked to an epidemiologist friend of mine once, and we went really deep into how PCR actually works and cycles and all this other stuff. And then he's like, I don't understand, like, why all of a sudden they're saying like cases are just jumping out and like, oh, we've got a wave coming up. And then it dawned on me. I was like, motherfucker, do you know what happens if you have to print a lot of money really rapidly? You get inflation, rapid inflation. The only way you don't get inflation is if you cool the economy, you put it into stasis, you lock it down. And then I went and backtracked and was like, oh, okay, so inflation indicators seem to be the best lockdown indicators and not fucking COVID cases. So whenever inflation started going up, you would watch all of a sudden the amount of COVID cases start shooting up through the roof, like, oh no, we got to lock back down. But the most recent prediction, and my favorite, because I think it's the biggest, is the European Union, I believe the day after yesterday, came out in a public statement saying that they are rolling ahead with the digital euro, which is a nice way of saying capital controls. And capital controls are what you do if you're about to have a mega sovereign debt default. Because, as a point Tom has made many times, where does the money go?
Yeah, I'm looking at that right now. I've got the European Central Bank pulled up here, and I know a lot of people talking recently. I saw even Whitney Webb speaking on this is a strategy for more government control, more government oversight. And I was wondering, since it's such a breaking topic, if you had any other takes on this move they're making.
Yeah, I'll let me jump in here real quick, and I was just speaking to this morning to my patrons for my Sunday market report, and I'm like, you can see all the bits and pieces that they're putting together to manufacture consent around what's going to come next. Trump's saying, look, I'm not going to do what you want me to do. I'm not going to go to war on your behalf in Ukraine. I'm not doing any of this. They have turned on a dime, and they've now turned the United States into an enemy. We now have the Financial Times running a headline the other day. We now have to consider that the United States is the enemy of Europe. And now that talking point, it's like Europe's version of Emily's List is all over the place, right? They're getting set up to. They need to take us to war as a cover story for their default. Martin Armstrong's been banging the shoe on the table like Khrushchev about this for years. I learned it from Martin, and then I've just, I'll be honest with you, I learned a lot of that from Martin early on. I resisted it for years, going back, back in like 2008 through 2013 when I was, 2012 when I was really just a gold bug, as he would dismiss, and he does all the time. It's funny. And then one day it finally hit me, like, No, the dollar is not going anywhere. The euro is what's going to go somewhere. And the problem with so much of this is that they need to consolidate the debt under one rubric, which in this case would be the ECB. How do you do that without getting all the member central banks to give up their sovereignty? How do you do that without the governments giving up their sovereignty? Well, the government's already given up their sovereignty. They take all of their cues from the European Union, but until you give the European Commission tax and spend authority and debt issuance authority, and then of course debt issuance authority, how are you going to create this quote unquote fiscal integration? Well, you need to scare the crap out of people. You need to go review, the setup in the movie version of V for Vendetta, which is they lay it out explicitly how you do it. You create a massive amount of fear. You create famine and privation. You create a problem, and then you offer the solution when everybody's starving and gasping for air. That's what they're setting up. So from what I can see right now, we're getting really close to the moment where they have to go all in on some kind of false flag in order to justify what comes next. Rolling out the digital euro has always been on the Gantt chart at the European Union for some October. Lagarde talked about it in October 2023, then October 2024, then October 2025. That's where it is. That's where we are this year. Now that they have a kind of certainty about the American political situation, which is that they've lost, now they have to go. They can't put it off into the future anymore. So Agenda 2050 turned into Agenda 2030, which is now Agenda 2025. So
yeah, it was really the timetables of those agenda were how long they were thinking that they were going to be able to run this out. So let's put it this way, like this, the eventual default is mathematic. That's what it's not like this has caught these people off guard. It's been something they've been planning for some time. What they didn't expect is the U.S. bucking, which is why I think it's been accelerated as much as it has. And your observation about what happened in July of, 2019, and Lagarde and Powell, that was
June of 2021.
2021, sorry.
Yeah, that was post-COVID.
With the climate bonds, right? Yeah.
Oh yeah. Well, we started with the climate. It wasn't just the climate bonds, but it started with Powell stating at the Green Sea Summit on, I think it's June 4th, 2021, that week, he said, Lagarde was up there stating to everybody that they were going to make the world safe for climate change and that we all had to coordinate monetary policy for climate change. And Powell stood up and went, and they all were, I guess, we're all individuals. And Powell stood up and went, I'm not. I have a dual mandate, full employment and stable prices. And Lagarde shot him daggers because she thought at that point that they had won because COVID forced Powell, that they had forced Powell back to the zero bound and that he was never going to get out of the zero bound. And he was like, yeah, I am. And then
Explain 2 weeks later, about what that is.
And then 2 weeks later, he raised the reverse repo payout rate 5 basis points above the Fed funds rate, which then over the course of 3 months drained $2 trillion from the Eurodollar market.
Explain real quick about how we got to the point where, well, let's say like August 2019 reverse repo crisis, how that came about. And I think that'll help fill in a lot of gaps.
Yeah.
For
so
people.
my theory in backfilling what happened, right? So I was going along with events like everybody else in September of 2019 when we had the repo crisis. Now, the backstory to the repo crisis comes down to something very simple that no one wants to talk about, but Martin Armstrong talked about a lot. And he talked about it a lot in his private blog, which I've been a subscriber to Martin's service for a decade. And I don't necessarily, I find Socrates interesting just for everybody's edification. I find it interesting, but I don't hang my hat on it. What I hang my hat on is when Marty is letting everybody know what his extensive network of contacts around the world, especially in London, are telling him, and in Hong Kong and in a couple other places, because Martin's done business all the way around the world. And it was at that point that I realized that I put all these little pieces that Marty have been throwing out at us together, which is that the American banks, starting with JP Morgan, by the way, in early 2019 began not accepting European sovereign debt at par as repo collateral, right? And so, when if they needed dollars and they had, German bunds, and hey, the Commerce Bank calls up JP Morgan and says, look, man, I need, $500 million. I've got these German bunds. Would you take those so you can give me some dollars on a 7-day repo? And they're like, yeah, I'll give you 350. I ain't giving you 500 million. Like, well, no, but you got to give me wouldn't do it. And I remember, and I can never find it because Zero Hedge really, honestly, dude, Daniel, get your shit together and give us a damn halfway reasonable search function so we can go back through the archives of Zero Hedge.
It's terrible.
I know.
It's fucking terrible.
He wrote 6 or 7 articles over the course of early 2019 after Powell was forced to Powell and Draghi together cut rates in January. That we were talking, they kept saying, why is JP Morgan trying to create a repo crisis in the United States? They must have written, if they wrote one article about this, they wrote 6 over the course of that year. And then it shows up in the SOFR blowout in September, which is nominally the repo crisis, where the demand for dollars got so acute that SOFR blew out to 10 or 11%, because at that point it was an illiquid market, because SOFR was still in pilot phase at that point, the secured overnight financing rate. So when that happened, I didn't really understand any of this. I'm now backfilling what I observed with my knowledge that I've come to since then. So, but what I said then was this. I said, look, this just feels like September 2007 when the repo market seized up because of the housing market, Alt-A and subprime and all that was eventually going to blow up. And the Fed stepped in, stabilized the markets, and everybody, all the rational actors within the alternative financial community were all saying the same thing. Well, the Fed steps in here, but if they don't fix this problem and they just paper it over, they've got about a 6-month halo effect until this good news that the Fed was willing to step in will be over, and then we're going to have another crisis. A la September 2007, repo crisis, March of 2008, Bear Stearns vaporizes, right? Commodity markets move against Bear Stearns is vaporized. The problem wasn't fixed. Bob's your uncle, beginnings of a financial crisis. Peak in gold, then collapse, massive dollar bull wave because everybody goes to cash. What did they do between September 2019 and March of 2020? They gave us COVID as the excuse and the cover story, because they knew that there was going to be a bidless market in the treasury market, or they fomented it on purpose. This is what I think happened in order to force Powell back to the zero bound and force him onto QE and force him to destroy the fiscal and monetary position of the United States. And Trump signed off on the CARES Act when Powell told him explicitly not to do so. But the problem is, as Marty pointed out at the time, the U.S. Treasury market went bidless. They woke up on March 4th, Monday morning, March 4th, the price of oil had halved over the weekend. They used the approximate cause of Putin saying no to production, OPEC plus production cuts. And we went to bed on Friday night, and oil was trading at around $80 a barrel. We woke up on Monday morning, it was trading at 40. The U.S. Treasury market went bidless, and the Fed will always step in when the U.S. Treasury market seizes up. Always, and they know this without a doubt. They don't give a fuck about the stock market, guys. They care only about the bond market. The Fed caring about the stock market is a fucking British psyop.
Yep.
Just stop all the bullshit. That's what it is. And what fucking pisses me off is that the libertarians and the zero hedge set love to write headlines because they want to be perma bears, because while they understand the plumbing, they refuse to accept that this is the way the world actually works.
So if you could drill into that just a little bit, the English psyop being that the Fed cares about stocks, could you explain that just a little bit for people who might not be familiar with that argument?
It's this whole idea of they're just going back to the whole wealth effect thing, and the president's working group on financial markets, known as the Plunge Protection Team, and blah 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 blah. That maybe under Greenspan and certainly under that feckless douchebag Bernanke, they cared about the stock market, but Powell has never cared about the stock market because Powell understood that in order to get us off the zero bound, something would have to be heard, and that's just the way it is. We never did QQE like the Japanese, where the Fed bought both stocks and bonds. They just did QE, where they just bought bonds. So at some point, when they were going to start disgorging the bonds, the stock market, and start raising the long end of the yield curve, stocks were going to get hit. Just simple, everyday, boring old. I prefer the safety of some form of yield over the uncertainty of an overvalued market trading at 36 times earnings. Right? Not hard, folks. This is just basic everyday. This is what financial guys do. This is what money managers do, right? They're not. It's not anything hard.
And just for size comparison, guys, which makes Tom's argument much, even more cogent than it already is the bond market. Everybody thinks the stock market, like, oh, Wall Street, the stock market. The stock market is a fraction of the size of the bond market.
Yes.
A small fraction. Like, we're talking like 1/10.
Yes. And by the way, the treasury markets are a small piece of the Forex market. The Forex markets are enormous, and they're all levered 100 and 200 to 1 because they have, or 1,000 to 1, because that's how you speculate on currencies. Okay? That's how the everybody's trying to hedge and lay off their currency risk. And this is not something I wasn't born with this knowledge. Literally over the last 5 years, I've had to learn this shit in order to be able to talk about it. 4 years ago, if you listened to me talk, I sounded like an idiot. Today, this is an evolution. This is time and trying to figure out how things happen, not necessarily why things happen, which is a point that my friend Chris Sullivan made on my podcast the other day. And I'm still reeling about how elegant that phrase is. Don't sit around every day thinking about why did the market move today and then feed the bubble vision hype machine or the Reuters or Financial Times or British fucking tabloid media hype machine. Ask yourself how markets could move like that, and then ask yourself who could have pulled that off. And when you do that analysis, and when you take that intellectual framework, all of a sudden everything looks a whole lot more like war than it does just a random walk.
Now, I have one question here from Caravaggio. Who's really running the financial shadow empire? Would love to have some names I could look into. And maybe we were supposed to end on that, but I wanted to just throw that out there. Does anyone have any answers to that? Or is that too big of a question?
It's decentralized. It's decentralized. Tom and I are just saying London because that's really where the bond market is headquartered at, right? They have multiple foreign states whose intelligence agencies they operate in. They have several treaty organizations, NATO being one of them. NATO's not your friend, by the way.
No, never has been.
Never has been. So it's an intranational a supranational organization, right? So you can find out who, like, some of them are in a particular country, but that's really going to be about it. It's not like there is no mustache twirling single guy. There's a group of families.
There's just central bank. There's who controls the individual central banks. I think it's really. I agree with you, Stormy. I didn't mean to jump in and start making another point.
No, please jump in as much as you want.
That's really. It's really important. No, what I meant is it's important, just out of politeness, that I agree with you.
There's some of them here.
Yeah. So so like to Sean Whelan's point, the bond market is more liquid than the stock market because it is. But when you start really understanding that they can use monetary policy to alter the value of each other's bonds, which then, of course, has the downstream effect of altering the exchange rate of each other's currencies, then what you wind up in this world where all the value that we perceive is fake, right? And so, and if everybody is engaging in levering up their central bank's balance sheets, which is what they were doing from 2008 to 2021, which I think the dollar reserve standard ended in 2008. We then were in the coordinated central bank era from up to 2021, and right now
because
we're
they
in
knew it was going to blow up.
well,
to Tom's point.
Yeah, they were trying. No, Stormy, they were trying to blow it up.
Yes, that's
They
a much
always
better
wanted
point.
to move intentionally to where they're going now, to where James opened this conversation with the digital euro will be rolled out in October of this year. That was,
But they don't want to
always
stay
their
here,
plan.
though. They don't want to
What's
stay
that?
here, though. I believe that they were
No, they
moving
don't.
to China.
Well, I think that was their original plan, and I think the
Yes.
Chinese have said, you know what, fuck you.
It happened on Evergrande.
Yes. And not only
Yeah.
that, it happened with Archegos Capital as well.
Yes. When Xi
so-
said we will no longer be prioritizing foreign bondholders, and George Soros runs to the New York Times and the Wall Street Journal, which is funny for an atheist Jewish person. I find it very funny that the ad hominem he throws at Xi Jinping is the Antichrist.
Yeah, absolutely, right?
This is the biggest George Soros fellatiator in history, along with Morgan Stanley. Tom, do you know who got killed in that very strange sailboat accident in Italy?
No. I
global-
may, but
do
I don't remember.
You remember
Go
like that weird spontaneous tornado that came out of nowhere and only went after one particular boat?
I remember this incident. I do not quite.
The
it's in
global
the gray area.
chairman of Morgan Stanley. All of the news articles are about like the inventor guy that was on there, British Israeli intelligence operative, and his lawyer, who was all fucking tied in with the SDNY, also dual citizen. There's a lot of citizenships here, guys. It's not just two. Again, it's multinational, but the one that you had to dig and find was whose sailboat they were on and who else was on it. And the chairman of Morgan Stanley was the person that was on that boat that I had to dig to even find out was on there. And that's a big fucking deal. That's way more important than some idiot investor guy or some idiot lawyer. So yeah, there's I believe Morgan Stanley and BlackRock were the primary people shoveling U.S. and European wealth. The European wealth I know had to go there because, I mean, if you're a European pension fund and you've been choking on negative interest rates, anybody that runs a pension fund will tell you that you need to make at least 8%, right, to even break even per annum minimum. And then you stack that full of negative interest rate sovereign debt. Because nobody wanted to buy negative interest rate debt, negative interest rate bonds are suicide bonds. That's like, would you want a checking account that has a percentage? You know how they give you like pitiful interest rates on savings account or a checking account? What if it had a negative interest rate and the bank just took money from you every month? You'd be like, no, I don't want this.
Well, no, I mean that's the Martin Armstrong's point. He kept saying the move to negative interest rates killed the euro's chances of ever dethroning the dollar. He was completely correct about that. And this, to your point, I think ultimately what Stormy's going to like we're both trying to say here is the following: that Europe banked on being able to replicate their crony capitalist bullshit, technocratic control over China the same way they did it with the West, meaning they bought control, and they bought control through central banks and through zero bound rates and everything else. And then they used hot money flows into China to create a whole bunch of oligarchs that then would have control of the political power, and that they would then subvert the Chinese political system and then have control over the largest pile of educated people in the world, relatively educated and industrious people in the world. And that was the move, to go from 300 million Americans and 500 million Europeans to 1.5 billion Chinese, and probably as well 1.5 billion Indians. And then now we control the world. The problem is that China refused to ever open its capital account. and the onshore offshore yuan divide stayed that way. And if you go back and you really review neoconservative arguments against China, going back to John McCain and Mitt Romney and all the rest of them, and calling them currency manipulators and all this rotten nonsense, it was always about in this case, Mr. Xi, tear down this capital wall. We want open capital accounts for China. And Xi said no. And at that point, China was always going to be ready to go, thank you for the trillions of dollars. You are the lowest subordinate in the chain, and in the payback chain. And that was absolutely correct. And your observation, Stormy, about Evergrande was stuff that I was saying literally at the time in real time. But it was also the shot across the bow for Evergrande was Archegos Capital, because it was the prime dealers that were most exposed to the blow up of Archegos Capital. And I wrote an article called Archegos Bikini Atolls, basically that this was all financial nuclear weapon lying in wait to blow up, as a warning that if you try to blow up China's capital markets, we're taking yours with you. There you go. We're taking you with us. And all I said at the end of that article was, if you think Archegos was one, why aren't there 20 others? Because really, at the end of the day, the guy who was in charge of Archegos was Bill Wang. Bill Wang was a fucking convicted. He's a convicted felon, for Christ's sake, and yet he was able to raise unbelievable amounts of capital from Goldman and Credit Suisse and this one and that one, everybody, and he raised the same capital off the same pile of collateral with 7 different people, and then blew it all up. I don't remember all the details. It's in the article that Dimes has pulled up on the screen for you, but go read it and you get an idea of how deep these things go and how.
Yep.
And how
the purpose is austerity. Just real quick, back to the central bank digital currency thing.
No, yeah.
Right? It's austerity. And to Tom's point, right, this is how the plan was supposed to work. Right? To stop, if Europe is going to blow up, what they need is a suicide pact. Everybody has to get together and say, all right, we're all going to shoot ourselves in the face at the exact same time. And this way the money can't run to any one particular country if we're all fucking dead.
Bingo.
All right. That's what was supposed to happen. And this is what Tom was talking about when he said the Fed decided to jump ship. To Tom's point, the structure was supposed to be central bank digital currencies in every major economic zone, and all of those central bank digital currencies being subordinate to the IMF. Yes. And this is not a hypothesis, because for a long time I referenced a document that BlackRock decided to take down. And when I was on the Myth of the 20th Century podcast with those great guys, shout out to Adam. He and his pod are amazing. Adam is much smarter with computers than me, and he was able to actually find the document archived in a very, very strange place. So Tom, I'm going to send you after this stream BlackRock's going direct reset plan. All right, so right after they got access to the Fed window, which a private equity fund and pension fund manager should have never have had, thanks Janet Yellen.
Right.
They went in there immediately after Powell had to have that, political gun put to his head, all right, and print a whole bunch of money. Larry Fink came to Jackson Hole and was like, yeah, this is the plan we're going to do. And how this currency was going to mint and inflate was basically going to get rolled into the carbon credit market. If you, dear listeners, type into your search engine of choice, billionaire buys forest, millionaire buys forest, you will be amazed at the amount of search results you get, because all of the billionaires were buying forest, because those were going to be the Bitcoin miners of the new central bank digital carbon currency. What the fuck ever. I actually know a guy who runs a large PE fund that had a team of brokers that specialized in nothing else but helping these retarded billionaires that have just bought said forests monetize their carbon credits and get them onto the new best thing that was about to happen. But the going direct reset plan literally highlights like, oh, well, we're going to have constitutional issues here. We're going to have political issues here. And hypothetically, if the Congress were to pass a law that said this, this, and this, it literally talks about how to basically remove 1/3 of the Constitution to allow them to do this. And if you look at who the authors are of this BlackRock policy proposal, they're all ex-ECB bankers or other ex-European bankers. This is like Europe and the UK trying to, they're basically doing the things that ugly girls do at parties, right? They just go around and try and make the hot girls as miserable as they are so they can all go home alone. Because the fat chick has to go home alone. Basically, Europe's the fat chick, and she needs to make sure that everybody else goes home alone just like she is.
Yep.
Well, I just got the going direct thing pulled up here, Stormy, if you haven't noticed. I found a site that I think collects several of the names you were just referring to.
Yes. I have the PDF document with all their little charts and graphs and itemized constitutional issues. So exactly what Tom is talking about. BlackRock was nice enough to provide us with some really nice physical documentation to make us sound less crazy. So that's good.
Well, it's convenient of them to do that, isn't it? It's funny how we all get called conspiracy theorists and everything else, which is just another CIA term for truth teller. But they don't. They write unreadable white papers that they assume nobody's ever read, because like all great thieves and narcissistic psychopaths, this is their version of duper's delight. They're like the Riddler. They can't help themselves. They have to tell you what they're gonna do just so they can rub your nose in it even more.
See, I don't know about that.
They're that disgusting, these people, but that is their pathology.
I agree with the disgusting part, but if you have a decentralized network of everybody that has to get on the same page, and you all have this inborn belief structure that the masses are both illiterate and stupid, right? Same reason why they never thought podcasting would happen, or no one would want to watch a conversation more than 20 minutes long. Right? They really, to Tom's point, they think the absolute worst of you. So they figured, yeah, we'll just put all of our policy papers up and on the internet, so all of us can coordinate from all the other people. And regular people don't read.
Right. And then they found, and then the problem, of course, was that they found
autism.
They're finding out slowly but surely that autism. They induce autism in order to turn everybody into logic. Obsessed, purity spiraling, noradrenaline addicted Momo monkeys, and that also created 4chan. It also created the ability for people to dig in and go, I found this, that means this, that means this means that. And weaponized autism is in both directions, right? It's both created the culture war and created the OSINT alternative finance, whatever you want to call it.
I just want to interrupt very quickly because we have one question, and while we were talking about bond markets, I think it's relevant here, from GB Mac over on our Rumble page. Aside from the last 4 years, what does a collapsing bond market look like?
Rising
Take it
interest
away,
rates.
Tom.
Rapidly rising interest rates. It looks like credit spreads between major sovereign debt issuers, meaning like the United States and the UK or Germany or whomever, collapsing, changing rapidly. Okay, the entire world and all the predictability that we all enjoy is all based on everybody in the financial markets, the currency markets, the sovereign debt markets, being able to lay off the currency risk so that they can have we can have globalized trade. So you can log in Amazon to get some cheap piece of shit from China or cheap great thing from China delivered to you in 2 days. Okay, that system doesn't exist without everybody having the ability to lay off risk, and in ways that get ever more and more and more esoteric the closer you get to the zero bound, where money is free and the risk of failure is consequenceless. is consequence light or non-existent. Start raising interest rates, and of course, all the leverage within that system starts to collapse. But the whole market at a superstructural level is based on all of these things staying in a particular range where everybody agrees. So famously, we had the Plaza Accord, right? The year after the world adopted LIBOR for pricing Eurodollars, and then by extension, not only Eurodollars, but domestic dollars, right? Because then every debt instrument that denominated in dollars around the world was quoted versus LIBOR. Now, this is why once Powell started changing the Fed funds rate rapidly, the first thing Christine Lagarde had to do was say, no, we're going to maintain credit spreads. This is otherwise known as yield curve control for the European Union. What she was doing was trying to stabilize the exchange rates and the spreads between bond yields so that they stayed in a particular range. Because as long as they were within a particular range, meaning the spread between U.S. and German debt was between negative 160 and negative 200 basis points, trillions of dollars worth of interest rate arbitrage worth of derivative contracts wouldn't blow up because most of them were, say, within that range. I don't know what the numbers actually were. All I know is I watched Lagarde she would panic every time it got too high or too low and allow the spread to change and trying to keep it in a particular range. And she did so from starting in July of 2022, 5 months after Powell started raising interest rates, right in the middle of the period when he was raising 75 basis points at every meeting. She of course had to do something about this. Now, thankfully for Lagarde, she had a fellow traveler, quisling, call it what you will, at Treasury called Janet Yellen, who is Mrs. Yield Curve Control. Like that's all she did when she was at the Fed. That's all she did when she was at the Fed, and she even did so when she was at Treasury. And I think in order to assist Lagarde in keeping the European sovereign debt markets from blowing up as Powell raised rates and forced everybody's rates to rise along with him. It could only raise to a certain level. So now let's talk about where we are today. Because if we were doing this podcast last week, I would be like, oh, well, that's interesting that this is happening right now. But I wouldn't be where I am right now. Why? Because in the last 10 days, I track every day. I track the U.S. German 10-year rate, and I've been doing so for 3.5 years. Why? Basic thesis. If there's going to be capital flight out of Europe, it's going to show up in having the German market, the German bond market, sell off, or relatively speaking, be bought less than the American market, which would then collapse the spread between German debt, German bonds, and American debt. Simple thesis. Like that spread in this case, because German debt's trading below American debt in nominal yield, 2.8%, 4.125%, as that spread tightens, that's actually bad for Germany because it's rising relative to American debt, which would then blow up all the European banks. So I said, as a leading indicator, and I told my patrons this, as a leading indicator, I'm now going to start doing this to see when is Lagarde going to lose control of her bond market. Well, that was the day after Zelensky got thrown out of the White House. The U.S.-German bond market, the spread between the U.S. 2-year and the U.S. and German 2-year and 10-year, I track both of them because the whole world trades on lends money. The traditional banking system lends against a 2-10 spread. So that's how we do it in the United States. That's how they do it in Germany. That's how they do it in the UK. That's how they do everybody. Banks lend more and buy short and lend long, and they do it against a 2-10 spread. So with that happening, what happened? 3 years worth of yield curve control on the part of Lagarde was wiped out in a week. The U.S. German 10-year spread has moved 75 basis points in a little over a week. It moved 20 basis points the day I met Martin Armstrong last week when I was on with Capitalcosm. And I mentioned this very thing. I said, Martin, isn't this interesting? The German bond market is off 20 basis points this morning, and the U.S. bond market is flat. And Martin smirked. He's like, oh, Tom actually gets it. Someone else actually is like, I finally found someone who actually gets this shit in the world. I'm like, yeah, it's right here. The proximate cause was given to Frederick Merz, the supposedly incoming German chancellor, is going to blow through all the debt, the budgetary limits, and rearm Germany by spending a whole bunch of money. Bullshit. Capital's fleeing Europe. It has to move out of the bond market, which is overvalued. Because remember, low yield equals high price. So as the yield rises, the price of the bond is falling. So now that's what's happening. Right now, the German 10-year is trading at 2.8%, folks. Lagarde defended 2.5% on the German 10-year for 3 years. And she lost it in a week.
In what world does German bonds trade at the same rate as U.S. bonds? In what world?
Because they are the safe haven asset. They're the safe haven asset of Europe. In the pile of European capital, when Europeans don't know what to do, they run to Germany. When the rest of the world doesn't know what to do, they run to the United States.
Yes, Europeans hate Americans. Let's just be real.
Well, yeah. At least European intelligentsia does.
I like to use that as a jumping off point. I have a whole line of tweets that I'm going to read out and get your reaction on, because I wanted to get into the Eurodollar. And now is probably as good a time as any. And I've got a tweet here from Santiago Capital. I don't know if you have any thoughts of them, but here's the claim.
That's Brent Johnson.
Great guy. Super smart guy.
Perfect.
He really is.
What many don't seem to realize is that the world is using a form of money, the Eurodollar, that no one can control. The U.S. has obvious influence, but it's still largely beyond their grasp. The biggest issue is that this non-state currency has been loaned into existence in the tens, if not hundreds, of trillions, but is convertible to the domestic USD supply at par.
Bingo.
That's why the dollar rises when the music stops playing. All that is why the dollar has not inflated away, despite all the bailouts, all the stimulus programs, the QE policies, and helicopter money. I was wondering if anyone would like to speak to that. And also, I've got another.
Stormy, I've hogged the microphone.
Tom, real quick, I want to tell you something.
Sure.
So I'm a JP Morgan private banking client,
right?
And I got a very interesting series of letters in 2023 and December 2022. So the first letter I got was saying that we will no longer be able to guarantee liquidity on LIBOR denominated instruments, and we encourage you before the end of the first quarter of next year to basically sell any LIBOR denominated securities or instruments you may have in your portfolio. I was like,
When was this? When did you get that letter?
This is 2023.
Yeah.
January 2023.
Yes.
And then I got a letter immediately afterwards that said, we will no longer be allowing you to purchase and or convert any LIBOR denominated instruments or securities.
Yep.
So I figure that's a perfect jump off point to touch on what Santiago Capital, who's again, very smart guy, everyone should follow.
Yeah. So why is January 2023 jump out to me? Well, it's because it's a year after SOFR became the law of the land for all U.S. debt issued after January 1st, 2022 had to be denominated against SOFR, not LIBOR. All existing debt was to be converted, and they had 18 months to do so. Now, of course, like everything else, no one does anything until the very last minute because, well, there's this major change coming, and we don't know if it's going to stick. And I don't think that everybody does the cope thing until the last possible moment, or until they finally get a notice from the bank saying this is what is happening. You better do something about it. At about the same time, I do believe the reason why this happened, part of the reason why this happened, is because the Eurodollar futures market on the COMEX collapsed in liquidity, replaced by the SOFR futures contract. and I remember when I was talking about all this stuff back in 2022 and 2023, I remember Jeff Snyder, Mr. Eurodollar himself, bamboozling all the guys on the right, including my friends over at the Duran, Robert Barnes, and others, all having him tell everybody, SOFR doesn't matter, LIBOR's still the law of the land, blah, 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 blah. It's got all the liquidity. SOFR doesn't have any liquidity. It doesn't matter. Now, I'm not going to accuse Jeff of being an agent for the Bank of England, but he certainly was their useful idiot for quite a long time. So what I'll say is the following. I said, yeah, but that's nice, but SOFR's the law of the land. So eventually everybody's going to have to get on the shtick. And what happened? From the moment that SOFR became the thing that people had to trade against and write futures contracts against, liquidity in the SOFR futures market on the COMEX started to rise. Eventually, it only took like 14 months, and it had replaced the Eurodollar market. And so within, and then by sometime, I think it was last year, it might have been the year before. Like the years, I'm getting old now. The years are all just kind of blurring together. But within 14 months, there was an announcement by the COMEX that they would be winding down the Eurodollar futures contract and replacing it, and effectively replacing it with the 3 months SOFR futures contract, which is where we are today. And SOFR works like a dream, because it's now the difference between SOFR and LIBOR is the following. And I've explained this many times, but just to make sure that everybody who hasn't heard me talk before, you understand. The difference between LIBOR and SOFR is the following. LIBOR was an agreed upon rate where 18 City of London banks would get together, only one of which was actually an American bank, JP Morgan's London office. The rest of them were all European banks of some form or another. Again, that cartel that Stormy opened the show with, getting together, calling each other up on the phone at the end of the day and go, what are you pricing dollars at? What are you pricing dollars at? Hey, I've got 5.1625%. And I got 5.1627%. Well, let's call it 1.26, blah, blah, blah. That's what they did. It was literally an agreed upon price. And they were all talking amongst themselves. Jeff Snyder was the first guy to clue me into the Eurodollar, and then I surpassed him. I thank Jeff for his service, but there's a reason why he was. I believe there was a reason why he was fired from Alhambra Partners. I used to read his blogs over at Alhambra Partners all the time, going all the way back to 2013. So now, as I tried to understand his inside baseball and all of this jargon, because he couldn't actually speak like a normal fucking human being, pissed me off to no end. I could not believe it. Like, are you trying to make this more complicated than it actually is? And the answer to that question would be yes. If someone's trying to make something more complicated than it actually is, and not trying to actually explain something to you, he's a gatekeeper, not a teacher. Fundamental fact.
Get his ass.
Yeah, I'm sorry. I get to kick Jeff's ass now because I won. I won the
Dimes,
argument.
I explained this to your listeners before in the Bangladeshi businessman analogy.
Mm-hmm. Yeah.
I don't know if you remember. So what Tom is describing is the exact same thing. This is very easy to understand. So if anyone is making it deliberately hard, they are obfuscating, not helping.
Yes. So the point being is that SOFR is a collateralized rate, meaning it's just a reflection of the cost of money in the repo markets in the domestic repo markets in the United States. And Jeff Snyder is not better than Zach Snyder. Fuck you. No, Zach Snyder is a fucking god, dude. He's so fucking based. It's not funny. He's one of us. So that's the thing is that, and SOFR was always going to replace LIBOR because all we had to do was offer a superior product backed by the Federal Reserve and backed by the U.S. banking system. So again, tying this whole story together, JP Morgan starts the repo crisis of 2019 in order to start draining the Eurodollar markets, which then forces a response from our Eurodollar, our European counterparts. They give us COVID and try to destroy the freaking global economy. That's my thesis in backfilling and backtesting, or backfilling what I think has happened here.
Yeah,
now,
and Stormy, I've got a tweet of yours pulled up here, just showing for people all the bleeding out of the $4 trillion from the Eurodollar market, just for reference.
Yes, that's exactly what he's talking about.
Yeah,
it's infinitely larger than the U.S. dollar market.
Yeah. And
they're not actually dollars.
Yeah, they're not.
Well, Tom, I'd like to know what your opinion of this is, because this is the thing that I found out that a couple people in the Trump admin have listened to some of the pods I've been on, and I've seen some changes of that come out in policy. I would imagine it's the same for you. We're actually a lot more popular than we think.
I think that is the case. I mean, the first time I saw Tucker Carlson use the word Davos, I knew that we were making inroads.
Yeah,
Right? I created the Davos. I created the Davos crowd meme in 2017.
Same thing with his use of WASP. I agree.
Yeah.
What I'm worried about is, okay, so I had a conversation with a former Fed governor, very nice lady. I am young in comparison to my peers. I'm in my mid-30s, so old people talk to me because, well, I'm a young person. And
I think they're going to
yes, exactly. So I asked this woman, I was like, okay, so could you answer me a question, please? I was like, okay, so the offshore dollar market, right, is about the 8 to 10 times the size of the onshore dollar market. And she's like, yes. And I was like, okay, but all those dollars and dollar denominated instruments, they're indexed to LIBOR, right? And she's like, yes. And I was like, okay, are there any, there's no US banks on LIBOR, the LIBOR committee anymore. And she's like, yeah, okay, like where are you going? And this woman also, by the way, was on the LIBOR committee.
Right.
And she's a very nice lady, and she's not a bad person at all. Right. Mm-hmm. And I just want to, I'm telling the story to, elucidate a point that I think everyone should keep in mind. Right. She was like, okay, yeah, what's your point? I'm like, well, if I own 90% of your stock, right, because there's conservatively 9 to 10 times the amount of offshore dollars than there is onshore dollars.
Right.
If I own 90% of your stock, right, and I control the voting rights, then it's not your company anymore, is it? It's my company. So who exactly is in control of U.S. monetary policy? And she just was stunned. Like she's like, I don't know what to say to that. Like my mind's blown. Literally used the term, my mind is blown. And then I realized, like, not all of these people, they're not bad people, right? So if you understand the timeline a bit more, this was created as a relic, was created as part of the Marshall Plan, right? And then it got like hijacked, and then it got scurried off into the darkness till about the 70s or 80s, right? So all of the people that set this system up were dead or retired by the time that our current crop of managers and CEOs and chairmen were even interns. So all of the boomers that you see in these positions of power now, the people that set this system up weren't even in the fucking business anymore by the time these people even started their careers. So it's like buying a house, right, and not knowing where the pipes are in your walls or the electricity is run through your house. Like a lot of these people just don't actually know how this shit works, and they've never had to think about it. I'm 36, and every single year since I've been born, interest rates are lower and lower and lower and lower. It was the wind beneath the wings of globalization. Because if I'm a Bangladeshi businessman and I go to the bank and I say, hey, I need a business loan, I need a line of credit, that banker's going to say, hey, well, you can have, this 15% interest rate loan because Bangladesh is a shithole and this is our actual cost of capital. Oh, I don't like that. Okay, well, if you don't like that, we have this 2% interest loan or 3% interest loan that next year will be a 2.75% interest rate loan. And then after that, it'll be even lower. Well, fuck, I'll take that. Okay, well, here's your loan. Like, that's great. All of a sudden, if interest rates keep on getting lower, that Bangladeshi businessman can refinance and refinance and refinance. And that's a majority of the companies, by the way, in existence. About 25% of the companies on the New York Stock Exchange don't even earn enough in fucking top line revenue. not EBITDA, not net, top line revenue to pay the service on their debt. Not the fucking principal, not the fucking payment. We're talking like the minimum payment on your credit card statement, like what your mandatory minimum payment is. They don't earn enough in top line revenue to pay that. But for the last 30 years, interest rates would just go down every year. So that Bangladeshi businessman gets to just refinance. It's effectively free money because wait a second, I don't have to actually like pay you any money. I just come back next year and refinance. That's right. And then it's even lower. I could even chalk up the difference as fucking revenue. And this has been going on all around the world. The reason that South Korea sprung up out of fucking nowhere and China just exploded and India exploded, like this is exported prosperity. Let's just keep it fucking real. We are the collateral on these fake dollars, right? So we are still on the hook for them, right? So the lowering of interest rates repetitively by these fucking people to keep these fake dollars alive has basically siphoned so much wealth out of the United States that it is so big we confuse it for global prosperity. Globalization doesn't fucking exist.
Bingo.
It doesn't.
Bingo.
It doesn't exist. There is no fucking, China didn't pull 500 million people out of poverty. America did.
Yes.
South Korea doesn't fucking exist. Just exported American prosperity that lives there. The second this unwinds, they are going right back to where they were when we found them. And everyone needs to understand that. Because the world is not going to work the same.
I had a question for you. The claim was, when I was speaking to our friend Jason Miranchuk a while ago, that, and correct me if I'm wrong, I'm sure this is wrong, but up until 2 years ago, and I think you mentioned this previously in this very stream, America did not control its dollar or did not control its financial sovereignty. Could you expand on that?
It does domestically. Tom, do you want to jump on that?
Well, yeah, what I'll say is Jeff Snyder kept making that point for years when I would read his blogs over to Lumber Partners. He kept saying the Eurodollar system controls American monetary policy. The Fed is not in control of monetary policy. I said, well, okay, then everybody needs to stop complaining about the Fed.
Bingo.
The Fed at the zero bound. The Fed is just another Eurodollar. With the way we described it in the newsletter one issue when I was explaining this stuff, I said, think of them in this way: at the zero bound, they're just another Euro trash band from the 80s. They're flock of seagulls. Raising interest rates is punk rock.
Yes.
Okay.
The U.S. was not in charge until it raised rates.
Right. They never were, because this is the and so Powell going to the Green Sea Summit and telling Lagarde, go fuck yourself and we'll call it even. And then 2 weeks later acting on it by draining $2 trillion of global M0 into the Fed's reverse repo facility by Jackson Hole of that year in 3 months. Because what happened when he did that, the reason that this set me off into this whole world that I'm in today, we would not be having this conversation if I hadn't already been convinced by Martin Armstrong and others that the euro had to fail because of its lack of fiscal cohesion, because of its lack of a singular bond issuer, because the euro is a fake currency. I said, well, I'm going to watch the euro. I'm waiting for it to crash. And
I just borrowed a bunch in it.
Well, okay, that's a great idea. It's no argument there. So did the Russians, by the way. So just saying. So, but what happened that week was, it's like forever blazoned on my brain. I go to Zero Hedge to read their report of the FOMC meeting. They're like, it's a nothing burger, except the Fed moved this one little technical interest rate 5 basis points. The euro was trading at $1.22. By Friday close, the euro was trading at $1.19, and outside reversal signal to the downside that propagated through the week.
How big of a move is that, Tom? How big of a move is that for a currency to move multiple percentage points?
3 cents in 48 hours. And more importantly, Stormy, it's enormous. It rarely happens. And it's happening right now in the other direction. The euro went from $1.03 to $1.08 the minute the German bond market started to blow up. Now, but we'll get to that in a minute. Let's just finish this story. But when it did that, one of the things, because of the way I keep my technical analysis very, very simple. I only look at candlesticks. I only read the candlesticks. I don't use moving averages, MACD, RSI, trend charts. No fucking chart art, man. The candlesticks tell you everything you need to know because the candlesticks only have what you know: open, high, low, and close. This is a very important point. So when I saw the euro throw an outside bearish reversal to the downside that propagated through the weekly, monthly, and quarterly charts coming into the end of a quarter, I'm like, what the fuck just happened here? And then it's like it's like you ever watch House, and like every episode of House, or it's certainly every friggin' Dick Wolf style procedural, in Act 7, there's always that moment where the guy figures out the whole thing. And then there's this big mimetic collapse, and House would be talking to Wilson, and Wilson would say one thing, and then boom, House would have the answer, and he'd go and he'd fix the person. And then, and then the story would end on a happy note that he was able to save somebody in 98% of every episode of House. Well, it's the same thing. I had this literal mimetic collapse, and I went, oh my fucking God, COVID, this, that, everything Martin Armstrong, it all hit me like a fucking wave. And I went, holy shit, the Fed is trying to kill Europe. And then it took me about 2 months to really put it all together. And no, I didn't go home with the fat chick. My wife was hot when I married her. Just saying, she's still hot. She's 55. So my point is that, like, that hit me like a friggin' ton of bricks. And I went to my people. And at the time, one of my patrons was active on our private discussion server. I put all this out there, and I said, could this be real? And he just looked at me and said, well, they don't call him Private Equity Powell for nothing. And I went, holy shit. And then I said, well, if that's the case, if I'm right about this, that means this, and this are going to happen. You asked earlier, Dimes, about predictability. I literally predicted the next 3 years of monetary policy that afternoon. The political fights on Capitol Hill, the attack, the insider trading scandal, the fact that Biden wouldn't go after, wouldn't reconfirm Powell, all of it, every fucking thing. And then
when he was talking about Janet Yellen doing QE.
What's that?
Yeah, when he was talking about Janet Yellen doing QE, keep in mind that QE was the exact opposite of what Jerome Powell was doing in the Fed. Right?
Exactly.
The Fed was doing QT. Right? So the Federal Reserve is doing this policy, and the Treasury Secretary is running around the globe using other people's central banks to try and undo what Jerome Powell is doing as he's fucking doing it. That tells you that there are two groups of people with opposite objectives.
Bingo.
And are pursuing opposite goals.
Yes.
Right? This whole regime is a monolith thing. And that's where most of the recent predictions that I've been rubbing in people's faces as Europe declares war on the United States. Very, very unvassal state-like behavior, by the way, for a group of people that are supposedly American vassal states. I've been told forever and ever and ever that they're just U.S. puppets. They're being really shitty fucking puppets. And I wish they'd stop.
Yeah.
But
I got a tweet of yours pulled up here just on that topic, exactly the vassal states of America.
Tom, you will really enjoy taking a look at JP Morgan's board, by the way. My only difference in my thesis versus Tom's thesis is that the Pentagon is also on the side of the U.S. prime banks.
Actually,
they're on the same team.
Actually, Stormy, I wouldn't disagree with that. I think that a certain part of the Pentagon looked at this whole thing and went, "Holy shit, they're trying to kill the country."
Yeah. Look at the last two. Remember that annoying "you will own nothing" pitch deck that these faggots were dumb enough to share? The last
I know.
two slides. For those of you that don't know, listeners, the last two slides of that World Economic Forum Great Reset presentation that they shared, with the first slide being, you will own nothing and be happy that they were nice enough to give us. I mean, because God, that was fucking gold. Really.
I know it was.
They took a lot of that down too. A lot of those Great Reset websites, I was looking it up the other day, they tried to scrub a ton of that.
Yeah, and BlackRock tried to pull down their going direct reset plan. Funny that. But they were, they say the U.S. will no longer be the world's military superpower. And then the last slide was the U.S. military will come under the control of an international consortium of child fucking faggots. So, you know who doesn't like the idea of the U.S. not being a world military superpower anymore? And they're also the same people that don't like the idea of the U.S. military going under an international consortium of faggots. Right. Well, the people that run that military for reals, not the people that you see on TV, not the Joint Chiefs, things like that. Right. You got to remember what Obama did. What did Obama do to the Pentagon?
Yes.
He gutted the Pentagon.
Dexter White was screaming at me back in 2011 and 2010. He was screaming at me. He and I are old friends, screaming at me on the phone going, dude, this guy's a fucking traitor. He's destroying the goddamn military. He's replacing all the fucking generals with yes men. He was screaming at me back then about this stuff.
He was not subtle and tipped his hand. So by the time he tried to remove these generals, keep in mind a general is basically the king or a feudal lord of a tiny little fiefdom. And when I say tiny, I mean between, 50 to 70,000 people, and all of these special access programs that he doesn't even have to fucking tell the president about. So they literally act like autonomous kingdoms that run in parallel to our society. And when Barack Obama got elected, he got elected, by the way, Tom. Oh, damn it. Never mind. I'll reach out to you privately, because saying this dude's name still makes my butthole pucker up. I don't like him, but he was a general that is responsible for the Obama campaign. So there was a traitor amongst them. Yep. But all of them took their special access programs and their little fiefdoms and privatized them. So almost all of the people that Barack Obama purged created private defense contractors doing exactly what they were doing. And to the great annoyance of Obama, he fired all these people, and all of a sudden the military doesn't work anymore until he gives all of the people that he tried to fire defense contracts to keep doing what they were doing. Because they took all of the people underneath them that had any talent, all of the docs, basically everything you would need to run that little fiefdom. And they basically ran in parallel. So you have had a defense establishment that apparently is the defense establishment. And then you have the actual defense establishment, now immune from any and all government oversight, any and all executive overreach, and privately capitalized.
Wow.
So I just add one thing here. Sorry, just because I'm really trying to bring this back to sort of the conflict between the Bank of England and also America. We've touched on it quite a few times in here. I just wanted to pull up to bring it back to this, looking at the Independent right now. Why are U.S. banks flying gold from London to New York? Around 8,000 bars have been moved out of the Bank of England's vaults in recent months. So we are seeing that transfer of gold to America. I'm wondering if we could just sort of recontextualize that and everything we just discussed, or if you explain that very simply.
Well, I'll be happy to do that in just a second. I want to just remind, I just want to say that during all of this, what I kept saying was, it's not going to be the generals that Wall Street would be working with. It would be the full bird colonels and the lieutenant colonels, the ones who actually run the military. And when I brought this up to Lieutenant Colonel Steve Murray on a podcast, he was like, of course, we're the ones that actually do all the work. We're the ones who stand up to the generals and go, oh, you want to do that? Well, we can't do that. We're not going to be able to invade Russia in 6 months. What are you out of your fucking mind? And we're not doing it. We have a lot more. The colonels and the lieutenant colonels have a lot more power within the United States military than people think they do. It isn't just
think about Colonel McGregor.
Yeah, exactly. And so for that reason, I just said, look, that's where the loyalty to the United States exists. It exists at that level and lower. The generals are all political appointees at this point. So now, so I was in my own little way, Stormy. I understood conceptually how this would work, right? How this
or else Trump would have been dead.
Yeah, no, agreed, completely agreed. I'm like,
and they would have got him before he announced.
Yes. I mean, I kept saying that there's no way Powell's going to be able to raise interest rates and keep doing what he's doing if he doesn't have help from Wall Street. And that means that there would be a hidden hand on some squishy members of the Senate or Congress to stop all the spending that was on the Biden, like Build Back Better. Like when I looked at Kirsten Sinema and Joe Manchin, I said, and I saw them rise up against Build Back Better. I'm like, Wall Street doesn't want the Build Back Better bill. I'm right about Powell. They're lying in wait until Powell can get reconfirmed. And once Powell gets reconfirmed, he's going to raise interest rates. And if he's listening and if he's smart, he'll raise interest rates to 6%. Well, he got the 5.5%. I literally said all of that. And I said it in the summer of 2020, in the late summer of 2021. And I watched Pelosi then try to maneuver and get all the bills under one vote and all this. And I just went into, I was on fire back then doing that shit. And I happened to be right about it all because I just read the game board. I'm like, you work for that one, you work for that one, you work for that one, and you work for that one. This is how this works. Boom. And Joe Manchin was the key. You want to give somebody, and Kirsten Sinema, you want to give somebody medals of honor for defending the country, you give it to those two fucking people. Because without them standing up in the Senate and refusing the Build Back Better bill and the debt ceiling increase and the rest of it, whatever there were three things that Pelosi was trying to tie together. The infrastructure bill, Build Back Better, and the debt ceiling increase. And
all that just means more liquidity for the offshore dollar markets. It's not about the
exactly.
spending.
And it meant that it would force the Fed to never raise interest rates because what would the Fed have to do? The Fed would have to monetize all that debt. They kept lying to us about what it would cost. And then when Manchin said, I knew it was over, when Manchin said, you know what? I'm going to wait for the CBO report as to what this is actually going to cost us. When he said that, he put the whole thing on ice. Pelosi was chewing on her fucking dentures and draining the city of Washington, D.C. of all the fucking vodka because she knew she was beaten. Then when the CBO report came out and it said this was going to cost us $6.5 trillion over the first 3 years of the bill, it was over. Done. It was over because they were selling it. It was a revenue neutral. It was a fucking lie. And when Manchin said that, I'm like, oh, he's our dude. He's on our. Someone's got a standing on his back going, no, you stand up in the Senate and do that. No one's going to kill your children. No one's going to kill your wife, and you're not going to die. And you're going to do this.
No one's going to Thomas Massey you.
What's that? No one. Yeah.
No one's going to Thomas Massey you.
There you go. So now let's talk about gold. So what's going on with gold? It's the United States. It's the United States removing the put underneath the global gold market.
So this would be really America striking back at the Bank of England because the narrative that I'm hearing, and Stormy, you could jump in on this, is that America is taking back or maybe for the first time, taking its economic sovereignty. Is that what that gold transfer would signify?
Well, it's a little bit more important than that. The U.S. is going back on gold. Mm-hmm. And not in the way that everybody thinks. We're not getting gold-backed currency because that would be dumb. And anybody that says that is dumb and doesn't know how gold actually works. Gold doesn't stop inflation, retard. I hate that so much. I hate libertarians so much. No offense, Tom.
I got investing news.
At this point, the closest I am is I'm only philosophically libertarian at this point. Like I'm so post-libertarian, it's not fun.
Yeah, because so gold does not work as an inflation hedge, or else inflation would have never existed in any of the countries that used gold as money, which is pretty much all of them in Europe and Eurasia for the last 2,000 years. So has there been examples? Anyways, they're going to back the treasury bonds with it, I think, Tom.
Yes.
Oh,
When the first time I met Vince Lanci on a Twitter space hosted by Palisades Gold Radio, Vince was going on and on and on about something. I said, no, Vince, that's not what's going to happen. We're going to go to a 5% gold cover clause on U.S. Treasuries, and he just stopped, and he had one of those moments. Of mimetic collapse, and he stopped literally in real time. And this is Vince, and you know how fucking smart Vince is. He stopped, thought about it for about 4 seconds, and went, "Holy shit, they're going to throw gold down in the yield curve." You're absolutely correct. And then a friendship for the ages was born between two fast-talking Italians from New York.
So what happens, Tom, if that happens? If we go back on gold, what happens to particularly the offshore dollar market? Because when we say Europe, Dimes, and to Dimes listeners, we don't actually mean Europe, the people that live there. Right?
We're talking about
just the people that have been basically effectively what happened in the US the last 60 years, right, happened in Europe 300 years ago.
Yeah.
All right. So when people say, oh, the American Empire and this, that, and third, they're not actually talking about Americans that just like grill and mow their fucking lawn. And we aren't either.
So, I mean, ultimately, the way I see it is as follows. We back the Treasury, and I've always said this. It's like we're going to go back to some form of gold cover. Like I go back to Jim Sinclair in 2005, 2006. Like if you guys didn't read JS Mindset back then, you didn't have that was the first real, that's the first real insider to walk away from everything was Jim Sinclair. God's rest his soul. I learned more from Jim than I've forgotten more that I learned from Jim than I'll ever remember. But what Jim always said is, we're not going to go back on a gold standard. We're going to go back on, we'll have some form of gold cover clause. And at the time he was thinking global M3 or something along those lines, but whatever, it doesn't matter. What we're going to do is throw gold out on the yield curve and then use it as a means by which to minimize the cost to the Treasury while paying investors in gold, investors in America at a higher yield, higher rate of return. It's going to force everybody else to do it as well. That's the point. Because if you don't do it, then we're going to have a superior instrument to your fully debt-based one. So you can make it a 5% cover or 10% cover. Judy Shelton's been making the rounds for about a year and a half now. I have a copy of her book on my shelf behind me because she sent it to me. I haven't had a chance to meet Judy yet. I need to really, I need to reach out to her. But she's not wrong. What she's talking about here, she's talking about like 100% gold-backed tips. I don't think that's what we're going to wind up with because I think that would be a hard sell in this market. But what you could go with is like a hybrid instrument. This is the first thing I thought of. I'm like, well, great. Like, how about a 2% or a 2.5% coupon and, 10% gold backing and then, allow the price of gold to rise to, however many dollars per ounce you needed to make everybody happy to satisfy those pension funds that need to be able to put 7%, book 7% returns every year, 8% returns every year on their balance sheet. But you're only costing the Treasury 2.5%, and you're just pledging a whole bunch. You're just pledging a small percentage of the gold reserves to pay for all this, and then you allow the price of gold to rise, which effectively raises the nominal yield, the actual yield on the investment. So, for example, if you pay a 3% coupon and the price of against a 20% gold cover, right? If the price of gold doubles over the course of that 5 years, or say let's call it 10 years, then you get 10% a year, but the price of the bond goes up by 20%. It's like adding 2% to the yield on the bond. If it doubles in 5 years, then it adds 4% to the coupon on the bond. So what is a nominal 3% cost to the Treasury is a 5% value improvement to the investor. Well, it's the same, or 7% or whatever it is. Design the instrument however you need to, throw it on the yield curve, let the market fight it out. I don't have an answer to what the market's going to do. I'm just giving you the model for how this thing is going to work or how it should work. And that's exactly what I think Besant is talking about. I think that's what the Bitcoin Strategic Reserve is about. And it's bearer assets are going to be there as strategic
who doesn't have any though?
Yeah. Oh, who doesn't have any? Canada doesn't have any. The Bank of England doesn't have any. Because we're calling the put on the Bank of England who's lent out all their gold or any sovereign gold that they may have off balance sheet. I think that's what's being drained right now because the Bank of England has nothing on its balance sheet. But the real question is how much does the crown actually have? Like, how about this one? China says that their official gold reserves are around 2,000 tons. The Russians say theirs are around 2,400 tons. Does anybody really believe that they only have 2,000 or 2,400 tons of gold, respectively? Bullshit. Russia's got a sovereign wealth fund.
Well, we've got
It's
Nudge
huge.
Unit here asking, wouldn't it be presumably to prepare Europe for the possibility of NATO becoming defunct?
NATO is already defunct.
I guess that leads into the next question, because I know we have to get going soon, and it's
Yeah,
probably too much of
by
an
the way,
ask.
Is Sean bringing up Jim Rickards? Rickards told us what the game plan was ages ago. By the way, he kept saying that China has more gold than they're letting on. He couched a lot of this stuff. If you watch like old Porter Stansbury things that he used to do, he used to couch it in like apocalyptic terms. But Jim was also telling you the structure of the market. The Chinese own 20% of the futures on the COMEX. They own 20% of the futures on the LBMA through proxies and this and everything else. They can move the price of gold wherever they want. They've been accumulating for the last 15 years, and they've been accumulating a hell of a lot more than what they say they're accumulating.
Now, I know we have to get going soon, and it's probably too much of an ask to compress this last question, but we've had a couple questions in the chat sort of forecasting what the average American can expect going forward. And I have one here from a friend of mine, Ted LaFaro, and this is related to all the COVID discussion we were having earlier. Is a false flag starting World War III unavoidable at this point? The EU just allegedly allocated $800 billion for military spending. I read something that's kind of a tricky number too, but presumably this is laundering their debt via military war spending. And I leave it to the two of you. What can we look forward going forward? Do we anticipate something like COVID, a false flag, or something to cover up the movement of money?
Stormy, why don't you go first?
Whether we can expect it or not, I would say the whole war against Russia was this, right? Remember Vladimir Putin cured COVID, ladies and gentlemen? Like, I don't know if y'all remember. But basically, if you, the Eurozone, including the UK, is basically bankrupt, right? It's insolvent, right? So what happens then if we fast forward this clock a little bit further, and let's talk about like what happens if it were to default, which it's going to, right? All of a sudden, all of the police in France that are cracking protesters' heads, which they are world famous for, don't fuck around in France. All of the firefighters and EMTs, well, what do you think they're going to do? Because remember, if you have negative interest rate bonds that no one wants to buy, right, they would generally just sit there unsold. But if you're a European technocrat, that's not acceptable, right? You need to fix this. How did they fix this? Well, they mandated that all of the European pension funds that do business with the government, which is all of them, that they invest a certain percentage of their portfolio in European sovereign debt. First, it was a very small amount, and then it was a kind of large amount, and then it was a really large amount. So if the European sovereign debt market goes tits up, these governments are going to find themselves out of money to pay for things like police and firemen and things like that. So if you go tell all the police that are currently cracking protesters' heads that, hey, not only are you unemployed, but that pension fund that you've been cracking people's faces for, yeah, that's gone. Yep. So we don't have any money to pay you, and also all your life savings is gone. What do you think is going to happen next? Bad things, obviously, bad things. So you need to be able to have some type of you need to be able to have some type of extra societal control, right? At the point that this goes tits up, you need to be at martial law level of authority over your populace, or else you're going to end up on a lamppost.
Yep.
So first it was supposed to be COVID. Then the COVID narrative started getting bucked, and the war that they were cooking off in Russia, well, it cooked off. So this is much better. Whether it is a war, whether it is a COVID, it doesn't matter what it is. It's the control mechanisms that become available to these people, right? They need the CBDC because they need to be able to control the population in some capacity, right? As they transition to whatever their new thing is going to be, right? When it comes to the war in Russia, England wants the war in Russia for the same reasons that the Europeans do, but except for the fact that the offshore dollar market is 400 some odd trillion dollars of uncollateralized IOUs. Well, what do you need? I urge everyone to check out Alex Craner's work on this. You can find him at Naked Hedgie here on Twitter. He's great.
Yes, he is.
They need the collateral. So how do they value oil companies? Well, they don't value the market cap of oil companies, right? How much oil it produces in revenue, none of that. They value it by how much oil is in the ground. And you don't have to pump that amount of oil out to monetize it. You can use that as collateral, right? Which is what they desperately need, right? They have a whole bunch of loans out, but nothing in their bank vaults labeled reserves, right? So they need reserves. There's only 3 types of reserves. There's gold, there's treasury bonds, and there's oil. 3 types of money, good collateral. So if the war in Ukraine looks like it's winding up, they will do something to keep that going. Because not only do they need the control, they also need the collateral. Russia is the collateral. They tried to do this in 1992. Go ahead, Tom.
I was going to say they tried it in 1917. They tried it in 18 with Napoleon. Blah blah blah. I was going to say, and this is part of also the reason why the yield curve control program that Lagarde and Yellen ran ended up with the Eurozone accumulating nearly $1.1 trillion worth of U.S. Treasury bonds bought at low prices, i.e., high yield, or as they were rising in yield. Here's one of the things: if you want to know how deeply angry the United States is, I tweeted this out the other day, and I did a Spaces with Tracy Schuchart the other day where she asked me directly about the tweet thread that I put out, which is that these people bought $1.1 trillion. When you break the TIC report down by region, Davos or UK, EU, Asia Pacific, rest of the world. I've been doing this. I went back and I went through the TIC reports all the way back to when Powell started draining the world of the offshore dollars, nominally from September 2021 forward. So right after Jackson Hole, and I started looking at what they were doing. And while China and Japan were selling, the Europeans were buying. Why were they doing that? They were doing that to offset that because they didn't want U.S. Treasury yields to get out of control. But since then, they've been buying all the way up and more. And the higher Powell went, and whenever Powell did what he wasn't supposed to do, they bought more. You can see that when you chart that, now the number since September 2021 is around $1.1 trillion in U.S. Treasury bonds. Who is now the second, or as of, the last report, the British sold $40 billion of the treasuries. But up until December of 2024, the British actually held more U.S. Treasury bonds, officially, the Bank of England, than China did. Now, add in all the English subsidiaries, the Cayman Islands, Bahamas, Virgin Islands, this one, that one, Ireland, you got to get all of that stuff, much more than that. So they're the biggest holders of of American sovereign debt. What did Jim Bianco put out there the other day, and Matt Smith and the other guys were talking about with these Mar-a-Lago Accords? One of the provisions of that is that in order to pay for the last 80 years worth of U.S. defense of Europe, which we want that money back, we're going to cram them down and reissue their sovereign debt as zero coupon 100-year bonds. Go fuck yourself. That's it. It's over. That happens. So what they were planning on doing was buying low and selling at the peak. As Trump decided that he was going to bring interest rates down, which of course, bring interest rate down, so the value of the bond rises, so that they were going to recapitalize and sell and make a couple $400 billion or whatever. Pick a number. I don't know, whatever it is, in order to offset their purchases. And then they were going to then also use that selling pressure to manipulate our yield curve. That's what's going on right now. They're buying 2s and they're selling 10s and 30s. Go look at the yield curve. I did this morning. I break the yield curve down by the 1-2 spread, 1 month, 2 month spread, the 2-3, the 3-6, the 1 year, 2 year, all the way out to the 10-30. And you can see the kinks in the yield curve on a weekly basis as it plays out. This is clearly what they're fucking doing. And then they're going to write a whole bunch of headlines. The Fed has lost control of the bond market. Bullshit. Fucking Bank of England is just selling.
Yep.
And
all this stuff about China unloading treasuries is going to destroy that. Like, it's retarded.
It's retarded that the Chinese stopped selling it 3 years ago.
Yep.
They buy 20 billion one month, they sell 15 the next month. You know, it's all done. It's all dumb. If anything, the United States and China have been coordinating monetary policy for the last 3 years to ensure that the global markets have enough dollars to function as the United States drains the Eurodollar system. That's why China issued a whole bunch of Chinese yuan denominated dollars or debt saying to like Thailand saying, hey, look, if you need dollars, we'll give you dollars, pay us back in yuan. And the Americans are like, that's great. Thank you. I don't have to worry about this shit anymore. It's
the head of the Chinese treasury came with a 20-person team, and they didn't meet with Janet Yellen. They didn't meet with anybody in the Biden White House. They sat down with the people from JP Morgan and the Fed.
I've been telling people, I've been saying over and over and over again that Jamie Dimon has been during the Biden administration was acting as both Secretary of State and the Treasury Secretary the entire time.
Yeah, Janet Yellen was too busy eating mushrooms, and not the pizza kind, the hallucinogenic kind, the fucking child.
So, I mean, dude, it's unbelievable. So if he does, but if Trump does that, all of a sudden, all the European banks are fucked.
Yep.
They're
and
fucked.
You need a CBDC.
All of that collateral that they currently think they have at that value has been written to zero because those bonds are unmarketable.
Yep. Which is, I think, why the CBDC. Nobody. I think that's why the CBDC has re-entered the conversation. Because I don't think that they can do anything.
They have to have. And that's why so the whole $800 billion worth of that's all, again, another quixotic attempt to create a centralized bond issuance from the European Commission. They've already tried this twice. They did it once with the Sure bonds back in 2020 or whatever it was, 2021, $250 billion of these damn things. They don't trade. They're currently priced at about 50 cents on the dollar or 40 cents on the dollar. There's no volume. And they've already stiffed their fucking investors once, and they tried to do it again last year. They couldn't get any buyers, and they're trying it again now over the Putin. I'm like, fuck, Putin can't invade Poland because the fucking trains don't work his trains don't work in Poland. We've known this from the beginning of the fucking war. Like, they use a different rail gauge than the rest of Europe. And the Russians have not shown us that they can do major military materiel lift either through air or with cars. They move all of their shit on rails. It has always been this way. It's the way that, you know why? Because the Russians aren't interested in invading fucking Europe. Why would they? Other than to liberate them again from the same fucking people that they had to liberate them from when they invaded, when they took Berlin and they beat Patton to Berlin.
All of their banks know that they are insolvent. They know that they're fucked, right? They, from the very beginning, all the people that own these banks had moved their money into green energy investments, and then had the European government come in with non-dilutionary capital, i.e. grants, and pour grants on top of their investments. So they're 4 to 5x on their money before the rest of the world got the whole climate agenda shit and were forced to buy into it, right? Yep. The banks in Europe don't care about going bankrupt, which is what a CBDC does. The banks in America are not bankrupt, and they don't really particularly like the idea of going out of business.
Nope.
So the European institutions, if the central bank digital currency comes out, they don't need martial law, they don't need guns in your face, right? All of the banks that you use already are just going to switch over, because it's going to come just like the COVID shit. It's going to come through the corporate institutions and the NGO institutions and the government institutions itself. They're not going to need to like, show up with, police at your door or whatever, make you switch. Unless you get your money the fuck out of Europe, out of euros, and particularly if you can, out of the Eurozone, unless it's in crypto, like you're gonna be fucked.
Yes.
So like for practical purposes, like what you can glean out of this podcast, if you are a Euro bro, is you need to get your money out of Europe. If it's in European property, sell it.
Now,
Take
if
that
I could
money
just
and put it somewhere else.
I think
and-
that. So I was going to say we might need to end right about there, and I think that's as good around now as good times. I wanted to bring Tom your attention to a comment I've just received on Twitter. It's not up in the chat right now. A guy named Kyle. He says he's listening to this in his car. He's quoting you saying, "If Powell does that, all the European banks are fucked." And his 2-year-old is in the car with him, who just goes, "Uh-oh." So.
Uh-oh.
I've got a 2-year-old myself, and so they go, "Oh no!"
Oh no, Mr. Bill. Oh yeah, there I'm baiting myself. Yeah, no, guys, it's been a blast, and I'll tell you that no, you're right, Stormy. Someone asked, Sean Whelan asked earlier, what's the trade? Well, the trade is America is where the money's coming. Watch what I'll tell you now is watch the money will start to flow out of Europe, and what I'm seeing right now. Is that there's a short wave of money flowing into Europe. I think there's a whole bunch of oligarch money coming out. They're just pulling it directly out, and they're trying to crash our markets and then create the manufacturer consent that that Trump is bad for America. That's what they think they're going to run because all they have is narrative. I noticed this last week. It was really
high
funny.
verbal IQ.
So, so I noticed this last week when they were trying to, when they were pushing on Bitcoin, and I started seeing people all over Twitter say, "Dudes," it was last Sunday. "Dudes, do you know right now there are no bids in the U.S. repo markets? Zero." I'm like, unsourced. Like, what are you talking about? And it was happening at the same time as they were attacking Bitcoin, because I firmly believe that Bitcoin and Tether are the hot spare are that's the heat sink for repo for hot money in America, like in the T-bill market, because it's a really big market. It's $100 billion, right? So yeah, like it was pretty obvious that they were pushing on Bitcoin to create this, to try and nudge the world towards this, but what was really happening was that the European bond markets were blowing up, going all the way back to what I said earlier. So they're going to try this over the course of the next 6 weeks. They have to push back against Trump's shock and awe as Trump exposes everything. They're going to put this full court press on all the way up until probably the second week in April. It'll really crescendo around the FOMC meeting, and if
that's
Powell
a panic cycle for Armstrong.
Yeah. And then the second week of April, I didn't even look at our Armstrong's raise here. I'm just
Second
thinking
week of April.
Well, Trump puts on tariffs on April 2nd. By April 15th, everybody should be screaming.
Yep.
All right. So I'm just going to throw up some links here. I want everyone, if you're not already, I assume everyone knows about who these two individuals are, but if you don't, Tom Luongo can be found at tomluongo.me. His podcast, his writings, everything is available there. A lot of what we talked about on this episode is expanded upon in great detail, along with many interesting guests like Alex Craner, who I was trying to go on at last minute because, as I mentioned at the start, Peruvian Bull could not get on, unfortunately. We're going to have him on in the future, but I had a phenomenal time with these two, and there's so much more. We could do a 9-hour stream if we wanted to. And also StormyWaters at Norman.new on X. Follow him immediately. And if you're here, you probably know who I am. It's Dimes, Blood Satellite, the human crash out. Glad to have you. Thank you
we should
both.
do this again, Tom.
Yeah, we will.
This was hyper compressed. So you can go on for, like I said, 9 hours on any one of the little pillars that we got to here. But for now, I'm going to say thank you again so much for taking the time. And thank you, everyone, for showing up as well. and I'll see you next time.